Welcome back to the Wall Street Podcast. Today, we're doing a deep dive into the Bank of America Global Investment Strategies, The Flow Show. This one was released August 8th, 2025.
That's right. And this report gives us a really precise look at current market flows, BofA's own indicators, and their strategic thinking. It's got some critical insights on asset performance and where things might be heading.
Okay, let's jump right in. Key market observations. What's really jumping out year to date?
Well, gold is this standout. It's up 30.3%. Bitcoin's also strong at 25.5%. Then you have stocks up 12.6% and IG bonds showing decent gains at 8.1%. Kind of a surprising mix, maybe a flight to safety.
Interesting. And the report talks about a zeitgeist, right? A prevailing sentiment.
Exactly. It identifies peace trades as being central right now. So that means favoring long positions in oil importers, think Japan, China, India. The idea is they benefit from potentially lower tariffs, maybe new trade deals, if global tensions ease.
Which implies they're peace losers, too.
Yes, conversely, defense stocks, tech stocks, Middle East markets like Saudi Arabia, its market is down 10% year to date. They're tagged as the losers in this peace scenario. And there's a note on America First policies, possibly leading to a U.S. dollar last outcome. China gets highlighted here as a favored play.
Why China specifically?
Peak tariffs seem to be priced in, there's consumer stimulus happening, and they've hit a record trade surplus.
Got it. Now, shifting to U.S. equities, still seeing that concentration we've talked about.
Oh, absolutely. The report points out the Mag 7 plus AVGO or RCL and PLTR, they account for, get this, 80% of the S&P 500's return since what they call Liberation Day.
80%. Wow. And what's reinforcing that?
Well, the report links it to pro-monopoly aspects of American First policy and also the disruption coming from AI.
Yeah.
Especially in the U.S. labor market, we're seeing the unemployment rate for recent grads, 24-year-olds, spike to 8.1%. That's up sharply from 4.0% just last December.
That's a significant jump. So this concentration is expected to continue.
The thinking is yes, until we see tech credit spreads widen. That would signal the AI cash burn, basically. Heavy AI investment not paying off quickly, becoming a real threat to the whole AI overbuild narrative.
Okay, let's dig into the flows themselves. Some pretty unusual numbers recently.
Very much so. The latest weekly data shows a massive $106.7 billion inflow into cash. That's the largest since January 2025. And this is happening even when the expectation was for cash to move into risk assets.
Huh. What about bonds and stocks?
Bonds also saw big inflows, $28.5 billion. Strong demand for both IG and, interestingly, high-yield bonds. That's the biggest inflow there since June 2020. Stocks, though, saw a $41.7 billion outflow. But it's important to note, this was largely due to sort of an abnormal liquidation from 3 specific UK funds on July 31st.
So not necessarily a broad shift away from equities.
Doesn't seem like it. Based on that specific data point, it looks more like a localized event.
And BofA's own sentiment indicators, the bull and bear.
It slipped a bit, down to 6.1 from 6.3, so signaling neutral. But the August Global Fund Manager Survey, the FMS, is potentially flashing an extreme bullish sell signal.
A bullish sell signal. How does that work?
It triggers under certain conditions. If investors think the chance of a hard landing is below 5%, or if global equity allocation gets too high, over 25% overweight, or if cash levels drop below 3.7%, cash is actually at 3.9% now. But it did trigger this sell signal back in the July FMS. And historically, that precedes stock market dips and treasury outperformance.
Okay, now for some of the deeper commentary, what's really driving these big, somewhat counterintuitive flows we're seeing, especially into cash?
Right, that $106.7 billion into cash is the big headline. As we said, largest since January 25, happening when people expected outflows. Bonds also strong. The key context for the stock outflow really is that it seems tied to those 3 UK funds liquidating on one day, July 31st. So it might not reflect wider market fear, more of a specific event.
And how are geopolitical trends, specifically this peace narrative, shaping investment strategies according to the report?
Well, it frames the peace trades along Japan, China, India, these oil importers set to gain from lower tariffs, new deals. The flip side is defense, some tech, and the Middle East as potential peace losers. But then there's this twist.
The Goldfinger thesis.
Exactly. It argues that even if peace should be bearish for gold, other factors are overriding it. Things like hedging against a potential Trump boom into the midterms, the whole 2020s decade of inflation narrative, potential U.S. dollar debasement, and also central banks revaluing their gold reserves. So it suggests continued bullishness for gold and maybe crypto too, despite the peace narrative. It's quite counterintuitive.
Fascinating. Lastly, the August Zeitgeist section. What's the client consensus on rates and earnings?
The majority, about 60%, are in the Goldilocks camp. They expect rates down, stocks up. That's backed by market pricing showing a 95% chance of a Fed cut in September, and S&P earnings forecasts up 12% to $285.
What about other views? Any tail risks getting attention?
Yes, about 30% see a rising tail risk of an inflation boom or bubble, where stocks actually rise with yields, possibly linked to that dollar debasement idea. Then there's a smaller group, 10%, worried about stagflation, yields up, stocks down. But crucially, 0% of clients expect deflation, stocks down and rates down.
0% deflation expectation. That's telling.
It is. And it informs BofA's recommendation to stick with government bonds. They note U.S. Treasuries have actually outperformed the Dow Jones year to date.
So bringing this all back to you, our listener, whether you're an individual investor or just navigating the economy, these findings matter. Think about AI potentially impacting graduate jobs, or how just a few tech stocks are driving so much of the market return. Does your portfolio reflect that? Is that a risk you're comfortable with?
And those shifts in global trade, especially with China pivoting and running that huge surplus that could eventually filter down to the prices you pay for goods or even their availability.
It really feels like a convergence of factors, these unexpected money flows, the geopolitical shifts, AI's quiet impact on jobs.
Exactly. It paints a picture of a market shaped by these subtle yet really powerful undercurrents.
Definitely something to consider how these shifts might reshape the economic story in the coming months. Thank you for joining us for this deep dive.